Welcome back, season 2, No BS Wealth Black CFP series with your host, Stoy Hall. We've got the lovely Romy Pickron back on, just as we had last year. So if you haven't caught her episode from last year, we'll go ahead and do all the tagging and stuff, but you'll get her background there. Today is about catching up with her, a little bit of insight of what's going on with the student loan stuff, and then, what's hot and popping within our industries right now and some thoughts on those. Romy, how you been?
Excellent. I've been great. Thank you so much again for having me today. I appreciate it. And thank you for everyone joining in and listening today.
Yeah, absolutely. So what's been going on since our last episode? It's been about 6 months or so. What's been going on with the business, you personally? How's everything rocking?
Everything's been going extremely well. I've made a lot of progress since the last time that we spoke. As you know, I am the founder of Asset Achievers, a financial management platform, a virtual financial management platform, in addition to the co-founder of Reducify, a budding fintech app to help student borrowers reduce their student loan debt. So both businesses are progressing extremely well. The fintech app, I'm actually working with Howard University in the Grow HU program. So that one is actually moving along extremely well. So thank you for asking.
Absolutely. I cannot wait to hear more about that when that one progresses. As we all know, regardless of the pause that's going on and the pandemic with student loans, there is a problem within our educational system with student loans and all of that. So to be able to help Reducify, if you will, the student loan issue, and definitely appreciate that. So applaud you on that side. So let's dive more into student loans, right? I don't want to get too deep into it because you'll hit upon what's going on from a legislative standpoint. But how about we enlighten everyone what's going on? Some people don't have student loans. Some people just hear it in the media. But since your boots on the ground, what is really going on with student loans in our country, and why has it been so negative?
Well, as you know, it is a hot topic in the country right now, and it's because some people are on the end of the spectrum where I am an advocate for student loan forgiveness and student loan cancellation, just because it impacts so many negatively. We're talking about it being a $1.7 trillion student loan crisis in the United States at this moment, where over 45 million Americans are impacted by this issue. So I am an advocate for student loan forgiveness and cancellation. And at this moment, we're currently waiting on a big date. So February the 28th, mark your calendar for that date, because that's when the Supreme Court will hear the case, the student loan forgiveness case. So we're waiting on that big day to find out if student loan forgiveness will move forward or if it will not happen. And I'm a big believer in optimism. So I'm hoping that it will move forward. And the Biden administration, in my opinion, has done a good job with being progressive on this issue. So we're waiting for that date of February the 28th on the Supreme Court hearing on whether or not we'll be celebrating student loan forgiveness and student loan cancellation, up to $20,000 in federal student loan debt.
Absolutely. And so I want to hit upon, it's a very hot topic to say student loan cancellation and forgiveness, right? If you're on that side, you can get blown up very quickly in the media and Twitter and all socials, right? I want to get more of your point of view on that, right? Now, I have student loans. I have a shit ton. I got like 90,000, I think, somewhere in there. So I understand, yep, get rid of them, please. Help me. So I understand that part. I also understand the other side of everyone else saying, well, I worked hard and to forgive certain things and all of that. So there's always two sides to the story, but I want you to say yours. What does that mean to you, and why are you such a huge advocate?
Thank you for asking. That's a very important question. I'm a huge advocate for student loan cancellation and forgiveness because it impacts my generation and my demographic disproportionately than it impacts the rest of the nation. And I'll just give you some facts. So, um, people between the ages of 35 and 49 hold the most student loan debt at over $600 billion. So, when you hold that type of debt, it impacts you in a way to where you have issues moving forward with your finances and making those important financial decisions to move you forward, such as buying your first home or starting your business, and that impacts you for leaving your financial legacy for the next generation. And not only that, when it comes to women, although we make up about 50% of the US population, we take out the most student loan debt. So we take out about 2/3 of the nation's student loan debt, although we make up 50% of the population. And that's based on a few different factors, but research has shown that it's mainly based on the gender wealth gap because women make less than men. So we have to take out more student loan debt. And not only that, African Americans are also disproportionately impacted by the student loan debt. We take out 80% for student loan debt than our counterparts. And as I mentioned before, that impacts us negatively with our finances going forward, with making those decisions that help us to build generational wealth, such as buying our first home, starting a business, or even investing in our children's education. So those are some of the reasons that I am an advocate for student loan cancellation and student loan forgiveness.
Yeah, and let's be real. When we're talking about that, yes, that would be a reset. You know, the markets like to reset. We talk about markets all the time. Being able to cancel or forgive majority would be able to reset the market and get people, I don't want to say back to ground zero, but the playing field would be a little leveled. My issue with the situation is the systemic problem that we face that I believe has not been addressed really at all. And that is, one, just interest rates in general on student loans. The ability for these universities to continuously raise tuition, book costs, and et cetera, which is just exponentially growing these student loans. You talk about private student loans, which we don't get it too much into it, but some of the universities actually own some of these student loan providers. So now you're just like really double, triple, and quadruple dipping, when ultimately the education is the important piece, right? Have you seen, or do you know of what's being done on that side of it? Or are we just really just focus on the reset of the forgiveness and the cancellation?
Well, we're really focused on the reset and the cancellation on the federal side of things. Hopefully in the future there will be something done about the private side of student debt, because as you mentioned, it is a travesty. Even just now when we're looking at the rates being raised by the Federal Reserve, if you have a private student loan that has a variable rate that impacts you, then that means your rate has continuously increased over the last year or so. And that's a huge issue. I personally believe that all student loans should have a fixed rate. Rates should not continuously increase. I think that is a huge issue, and hopefully that is something that will be addressed in upcoming legislation.
Yeah, I agree. And even on the Fed side, though, those rates have grown, right? And ultimately, if the Fed is really caring about the public in terms of education, which makes us a stronger country, right? Yada, yada, yada. That's the whole point of education. Then why isn't that a fixed rate? Why isn't that 1%? Why is the government trying to make so much money on us as individuals to get our education? That's the part that really kills me on the federal side is, why are we in the sixes with some of those student loans? Why isn't it just a 1% thing if they really cared about our education?
I agree. And so to your point, so federal loans, the rates are fixed. They are fixed. However, when the Fed decides to increase rates, so any new upcoming student loans would receive the new rate, which is a fixed rate. So to your point, I do agree that it should just be a flat fixed rate, and whenever the Federal Reserve decides to raise rates, then they should not increase. New student loans should not receive those new rates. It should just be at a flat fixed rate, 1-2%, whatever. But I do agree to your point that it should not increase when the Federal Reserve decides to raise rates.
So, devil's advocate, the other side, right? Why is it, how is it fair? How is it fair for me to paying into taxes? Maybe I paid off my student loans, or I never had student loans, for all of a sudden for you to be forgiven of basically all your student loan debt. How's that fair?
Well, life isn't fair, and we know that. I actually paid off all my student loan debt. My partner and I, we paid off $130,000 in student loan debt within 2.5 years. And I'm still an advocate for student loan debt and student loan cancellation because I know the impact that it'll have on our nation. Based on research, the student loan forgiveness and cancellation is looking to aims to impact the racial wealth gap within the United States. So life isn't fair. The student loan debt game is not fair and has disproportionately impacted people of color and women. So as I mentioned, I'm a big advocate for student loan debt forgiveness and cancellation based on those reasons. And just because I paid mine off, I'm still an advocate because I do believe that we should give people a reset and a fair chance at building wealth in the United States. And the fact that we should give our future generation a leg up instead of holding them back with this student loan debt.
Yeah, that whole philosophy of helping others and everything is something that we really need to address more. And a reset here would be just a ginormous leg up. I mean, 1.7 trillion that's quite a bit, right? You want to increase spending, you want to increase housing, you want to do all of those things that would help this market and our economy flip around from current recession. Then that's a very big trigger. Absolutely, yes. Absolutely. So we've hammered that point a little bit. I think everyone's well aware of where we stand. Over the last 6 months, has there been a common theme within your client base that you keep hearing or that keeps popping up? Because we are in high inflation. We are in a market that's all over the place. We are gearing up for a presidential election next year. Has there been a common theme that you've noticed within your clientele?
Yes, there has. As you mentioned, based on inflation and a possible upcoming recession, my clientele has been concerned about their 401ks and their retirement. And I think that is, it's ironic because the clients that I work with are millennials like myself, but also still first generation wealth builders. So we're looking at our retirement accounts decline. So our hard earned savings decline. And so my clients have been asking, should they continue to invest within their retirement plan, although they see that this balance has been steadily decreasing for the last year or so? And my answer to that is absolutely. You should continue to contribute to your retirement plan throughout this time, because if you think about it, the market has been extremely volatile, but mostly it's been down over the last year. And so this is a great time to contribute to your 401k because now the market is off its recent highs. So while it's down, you want to make sure that you're contributing and investing in your 401k and taking advantage of a down market, because as we know throughout time, the market will eventually go up. And when it does go up, you want to have that advantage of contributing to it while it wasn't up and while it was down. So this is a great time to be invested in the market and taking advantage of the volatility and while the market is off its recent highs.
Absolutely. And I think that a lot of that has to do with two things, right? Financial education, right? We're just not in our schools. We're not taught financial education, which would then help the second part, which is kind of what we talk about is the money mindset, the psychology behind that. One simple thing is everyone's saying, I've lost so much money this year. You haven't lost anything if you haven't sold it, right? You haven't. It's not gone. It's just right now trading at a bigger discount than you wanted it to, which is the whole point of, to you, what you were saying is it's at a discount. It's time. It's one, you should always continuously put money in, but two, this is definitely a time to be putting money in because of this discount. When it hits all-time highs, I mean, we're talking another 30% up, and that's where you want to be, and that's how you build wealth. But I want to get back to kind of the mindset of that, especially within, our communities and our generation of, we don't have that education to understand, and we probably haven't had the parents, especially since most of us are first generational wealth. What are you doing and saying to your clients, and not just on the 401k, but in general, when it comes to that mindset, to understand of how to, one, get wealth, build wealth, and then keep wealth? Is there anything like from a mindset standpoint that you really drive home?
Absolutely. So I'm big on education. I'm a big proponent of education in both of my businesses, Asset Achievers and Reducify, because I believe it starts with education. And some of the things that I drive home with my clients, for one, I make sure that they understand dollar cost averaging. That is an extremely important component when it comes to investing. And I also make sure that my clients understand how volatility and how the market fluctuates and the long-term advantage of investing, because I believe in this day and age with social media and so many ways to get invested in the market, there's so much noise, and we need to be clear on safe investments and the best type of investments for our clients. I know within the millennial generation and Gen Z, prior to this year, there was a lot of conversation about cryptocurrency, and I'm actually a believer in cryptocurrency. However, I'm also a believer in diversification, and that's another point that I try to drive home to my clients. You have to be diversified. If you are only invested in one investment, one type of product, then you're putting all your eggs in one basket. And we all know what happens when you put all your eggs in one basket. Then you have the disadvantage or opportunity to lose it all when something happens, or when the market crashes, or when crypto crashes like it did. So those are some of the points that I try to drive home and educate my clients on, because I believe, those things, if you know about diversification, the long-term benefits of the market, dollar cost averaging, those things will give you a huge advantage when it comes to investing.
Yeah, I'm a firm believer in don't look at your shit. Just don't look at it, especially in the long term, right? I mean, obviously, look at the short term. Make sure you have enough in your checking account. But everything else, just don't look at it. There's no point, because all you're going to do is get emotionally attached to it. Money is a very emotional thing for most of us, and when you look at it every day, hell, when I do it, right? I manage a fund, and even certain trades, I look at it too often. I have to tell myself, back out, because it doesn't matter, right? It matters, but it doesn't matter in this short run. You're looking at year 3, 5, 10, 20, 40, right? You're looking so far out. Just don't look at it. That's our job, right? Our jobs is to make sure that those things are working, and we'll update you when things happen and all of that, but there's no need to look at it every day. That's where I believe the pandemic, our technology, the pandemic, and the ease of investing has been overall positive, but I'm saying there is a negative to that, and that's the fact that everyone has information at the tip of their fingers. Kind of like you said, it's just too much overload. They are able to trade in and out of things whenever they want, and they are getting a lot of misinformation, whether it is from the Reddits or the Twitters or their friends, across the board, from cryptos to stocks to real estate. I mean, it doesn't matter. It's out there, and that's an issue. That's a problem. And that's, why we do this podcast. That's why we're supporting as many other CFPs out there as possible, because we got to be louder than that noise to really have
Yes.
people understand that that is just noise. Your situation is not like anyone else's. There is no cookie cutter. There is no, Dave Ramsey type, like this is what you do, you'll be fine. No, your situation as an individual or business, drastically different than anyone else's. And I love driving that point home because that's when people understand that we care about them over we care about their assets. Taking care of them is more important because then everything else gets taken care of. Obviously, I know that you feel that same way, but what has been the hardest thing in your career, really over the last year, of acquiring and battling prospective clients, or the noise in getting people to sign on board and be like, you know what, take care of me?
I would say one of the biggest battles is something that's been out of our control, would be the layoffs. Layoffs, and really trying to help people understand the value of working with a financial planner, because, as you mentioned, with first generation wealth builders and in our community, a lot of times people have not worked with the financial planner before. So it's the first time working with the financial planner. And based on some of the things that have happened in our communities when working with people in finances, unfortunately, people are skeptical sometimes when working with financial professionals. So those two things, the layoffs and trying to help people understand and see the value of working with a financial professional, especially during these times of economic challenges. Those have been the two big things, because when you experience a layoff, there are certain things that you need to ensure that are in order, so that way you can continue to, stay afloat with your finances and hopefully also bounce back even stronger. So those are the two things that I would say that I'm seeing.
Yeah, and that battle for us is very, very hard. Majority of our value is more intrinsic. Like I can't just show you the value every day of what we do, right? And that's why our industry ties a lot to AUM and your performance, and that's hogwash to me. That's the investment piece. The true value of the advice and being with you emotionally and walking through those things is really tough to just pinpoint, specifically like monthly or daily or whatever. That value shows in this type of situation, in this market, right? Not the layoff things. We can't control layoffs. But what we can do is create a plan for when something happens, you're okay, right? I was just chatting with someone on Twitter who's actually in the UK about this, of layoffs happen. That is, agree or disagree. Some companies do it for bottom line. Some do it just because they have to survive, right? But they happen. That is a cycle in business. But being prepared on the front end for no matter what that happens allows you to recover, allows that time to move forward, and to your point of being able to be stronger at the end. That's because you planned. That's because the planner part, right?
Exactly.
Our clients have not been calling and complaining and are in struggles because on the front end, we have planned for that. We've educated. We've discovered that this could happen, right? And I think that's a value that people will feel. Our current clients will feel it now in this situation. The ones that are prospective will not realize it, but are hurting more because of something that they didn't do before. And that value is the hardest thing for us to do. I try to tell everyone that, no matter if you have a planner or not, like the value of your actual financial planner, you will not see day to day, month to month, year to year. You will feel at certain points, and that's when you'll go, well, damn, thank you for being around. Thank you for taking care of that, all of those things. Yeah. And I just love highlighting those stories. We need more of that. We need to be louder in that regard to allow us all to grow. And don't get me wrong, everyone out there thinks planners are in competition. We are not. There's way too many people out there that need help. There's too many people out there and not enough planners to begin with. And
Yes.
one thing I will take from the pandemic is the ability to do everything virtual and get clients anywhere, as opposed to in our industry, it used to be just like local, right? It used to just really be local. Now, if you are a business owner, a prospective client that you're looking, go research, go Google, type names in, figure things out, interview them, get to know them. And when that thing clicks, it doesn't matter where they're at, because you're able to work with anyone, assuming that has been there. So I wanted to bring that up just to highlight that between your two companies, you're not just local, right? You're not just taking on clients locally. That's not how that works. Have you seen an increase of more widespread prospective clients coming in and not just, right around your block?
Absolutely. Because as a millennial, we value flexibility. And my firm, we pride ourselves on flexibility because I understand when I was working in corporate America how limiting it could be being in one place and being actually in an office building and having only to have my clients come to that physical space. So yes, I'm definitely seeing a variety in clients coming from different areas, and also being extremely thankful that I have a virtual practice and that I'm able to meet them on lunch breaks or in between. Some of my clients are even driving to different locations when we meet. So yes, my clients value that flexibility, and so do I. So to your point, yes, we have clients coming from all different areas based on the fact that we are a virtual business.
Absolutely. Well, we hit my agenda. We hit a lot of things I wanted to get out there and highlight from you and get your feedback. Is there anything that you wanted to chat about or that has come up recently that you wanted maybe in my opinion on, or at least wanted to talk through so the masses could hear us?
Well, you know what? Thank you for bringing that up. I did want to ask your opinion regarding the possible upcoming recession, because as you know, analysts have said that there is supposed to be about a 60 something percent chance of a expected recession this year. So I wanted to gain your opinion on that, and so that we can also share that quickly with the audience.
Yeah,
So, because I know that that's a hot topic and a topic of concern.
sure is. Now, by definition, recession or the feel recession is what I talk to people about, right? Definition is 2 quarters of negative GDP, basically. That happening, I can see that, right? I believe the 60, 70%. The feel, which is what I care more about, our clients care more about, that's what we're feeling is the recession, if you will. I believe we've been kind of living in one and have been for a while. So that's how I answer that, right? From a pure definition and what you'll see, no, we have not been. Will we? I think it's high probability. The feel, you're living it. You're living in a recession and you're seeing it. You're seeing the inflation. You're seeing the layoffs. You're seeing, now what's been crazy about this one is you're seeing wages actually kind of increase a little bit, but you're seeing those layoffs. We're getting reports of people have ran out of their emergency savings and are now increasing their credit usage. That screams recession. That screams problem, right? Because that means they've already went through everything they've had. They've went through the stimulus, and now they're getting loaded with debt on their credit, which we know is a longer term effect, not just a short term, but that is an issue, could be for years if things don't turn back around. Then you've got a fictitious, I don't believe in the whole jobs report thing. I think that's a method that I think needs to be changed. I don't think it reflects accurately because I know there's a bunch of people who don't want to work, but I know a bunch of people who want to work and they can't find something. So however which people think about that. So quick answer is we're in it. We're feeling it that we're in it. But statistically we are technically not. What does that mean? What does that issue bring? I'm still believing that there's going to be some type of crash is not the right word because we can't use crashes, right? We don't want to say that. Don't want to trigger you. But I will say that I can still see another 10, 15% dip from an event that happens, whether that's a credit event, or another issue, we're not out of the woods. Now, that being said, to be optimist, right? I'm a realist, but to be more on the optimist side of things is we're gearing up for a presidential election. We've been in this bear market, if you will, for a little bit. Bear markets don't last forever. We are starting to see improvement in some economical things. We're seeing improvement in the stock market. We are getting earnings reports back that are relatively more positive than people would think. We'll see what CPI, the inflation comes back at. That will be an issue. But we are seeing some improvement. And then we're going into the presidential election, which is always weird, kind of wonky. But I believe 2025 going forward is when our next bull will come into play. Interest rates will have settled. People will have mentally and emotionally reset when it comes to interest rates because we've been historically low for so long. Now we'll be getting back to the average around the 5s, 4s. People will feel that. And now we can move forward, right? Yeah. That's how I feel about it. I know long-winded a little bit there, but that's how I feel about it. Now, a war, Ukraine or China or Taiwan, any of that, derail everything I just said. But as we sit right now, that would be my opinion. What about yours?
Thank you. I appreciate you for providing your perspective. I feel similarly because, as you mentioned, although we have the job reports and that came out, it looks great. But as you mentioned, we do know plenty of people who have the credentials, have the experience, and they cannot find a job at this time. So people are feeling the recession right now, higher prices, gas, food. And so people have been hit hard in their pockets. And so the market has been extremely volatile. And as you mentioned, we've been in a bear market for some time. Over the long term, I am optimistic, and I do believe that we'll see some more positive results going into 2024 and 2025 in the stock market.
Yeah, I think so too. Even locally, I talked to a lot of bankers and lenders and commercial developers, and that's kind of been the whole thought. Is this year will be everyone's going to pull back a little bit. Things are going to settle, figure it out. 24, we'll start to see more of an uptick. And I think 25, 26 is when you'll really start to see that come back into play. It's just a matter of, can most people survive that long? And that's what worries me the most. If we're already seeing savings being ran out and credits being utilized at a higher clip, it's February of this year already, right? So if they're already doing that, can they make it through the year? Can they do that? Can most people survive? And I don't mean like they're going to die, but I mean like financially, can they support that for the next 12 months or 18 months, whatever that number ends up being? That's what worries me the most about where we're at currently, which brings me all the way back to the student loan thing. That needs to happen for specifically that reason, not like the global bigger picture, but to allow people to survive and be able to get through until this thing turns around. That's why I believe that regardless of what comes out, I still think they're going to pause student loan repayment for another year. I think that 0% interest might stick around a lot longer than people think, especially if it gets ruled in the wrong direction. But even if it doesn't, I think that sticks around a lot longer, where people understand that's been a huge help for people within the cash flow. And I just don't, getting political, which I'm not, but getting into a presidential election, administration's not going to like all of a sudden turn up all of those interest rates and make people start paying again. That doesn't help votes, right? So let's think about that. From the voting standpoint, something's going to happen. I just hope that the ruling is that 20,000 so we can build on that and move forward.
Yes, absolutely.
So, yeah. Well, hey, this is fun. I think what we should do once the hearing comes out, I think we should just jump on real quick, give a little update, hear from you, Miss Queen of Student Loans. We'll get your opinion on what happened, what's going on. If we hear anything, hell, they might continue it for another month. Who knows, really? But I think we should jump back on real quick on that and just hit upon that little highlight because because that makes sense, right? I mean, and I'll release this one that week, this episode that week, and then we can add on that following week.
Okay, that sounds good.
All right. Well, listeners, thank you for staying around. Hit upon a lot of things here, but very important topics. Romy being the expert, if you reach out to her, reach out to me, I'll connect you. Student loans will hit you hard if they haven't. There is no real change going forward, so we really need a plan for those, parents who have students to be, students that are in there, and then all the way trickle down to, my children who, are 8, but hey, I got to start planning. This thing is a wild ride. So like, share, subscribe. We'll hit upon all of our socials and make sure to reach out. And Romy, thank you again for being on the pod for round 2, if you will. Look forward to getting your opinion on what the ruling may or may not be from the hearing.
Absolutely. Always a pleasure to be with you. Thank you so much for having me.
The preceding program was sponsored by Black Mammoth. Any awards, rankings, or recognition by unaffiliated third parties or publications are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Black Mammoth. Information regarding specific awards, rankings, or recognitions is available on the Black Mammoth website, www.blackmammoth.com. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to affect or attempt to affect transactions and securities or the rendering of personalized investment advice due to various factors including changing market conditions. The information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up-to-date, Black Mammoth do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature and is provided for informational purposes only and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Past performance is not indicative of future results.